Hello, how to decide if stocks belong to your swing trading watch list? Well, we have some stocks here that we are going to analyze together. Let's get to it to see if they belong to, our 2026 watch list. The first one is AEP. We are going to use a maximum monthly chart, and we want to trace value lines. The value line is where we want to buy. We are analyzing the stocks in relation to the strategy we are going to use to trade it. And that is how we are picking stocks to put in our watch list. And that watch list is going to be the watch list we are going to trade from for the entire year of 2026. So when we look at AEP, we have this value line here. Let's activate it. I think that will work. And pretty much we are just starting from one low, passing by obvious V that we can see, and it went that route. Alternatively, we can try to go this route and get a little bit closer as well to see if we can touch base with those. But I think that would be enough. With that, we have this one that went horizontal, and we can try to trace and get closer here as well to see if there is something here that we can keep in mind. So there is this one that's in 2023, it went below to touch base with this and then went up. Other than that, it has been following this one, and that one could be updated as well. But we have multiple touch points with it before it went below this one. So we can consider this to be a buying point as well for us. So first, let's see if you're having a higher mountain. So this is higher, but then it took some years before it reached it. It exceeded again, and then we have about 2 years or so is reaching and taller and taller. So it came back down after the pandemic and then exceeded, and from there it pulled harshly down and start going. So we are going to assume that this is going to be another value line that is going to be resting on, unless something drives it back down here. So yes, for 2026 watch list, if I can actually exceed that selection, otherwise we can. So we are going to select those two to be where we want to buy. Right now, though, it reached all-time new high and start going down, but it's nowhere near it yet. But we have those two we can work with. If it comes down here, we can buy some shares. If it comes back lower, we can buy some more before it start going up. So yes, for this one. And what we are looking for is higher lows at the valley and higher highs at the mountain peak. That way we see growth on both sides of the chart, showing that the chart is upward trending for these stocks. And since we have it for this one, and the mountain peak is like about 2 years time frame between them, and the all-time new high is this year, so that the growth continue going forward. So, and yes, for this one, and that is pretty much how you decide if a stock is good for your watch list. So we are going to put good chart here. The next one is XEL. So XEL, let's see if we can, it went through this little bit here. Let's see if we want to move it down. If I move it down, it won't touch any other. Again, keep in mind that it's an area we are working with. If we move it up, it's going to go across all of those. So I'm going to leave it right here, but then I'm going to come back here to see if we can trace some more. So when I trace it like this one, seems that this year, last year, it pulled sharply lower. But again, you have to think in mind that we are manually twisting those lines. So, and they are not just tiny lines, they can be an area. So we are going to keep those two. And yes, it's uptrending at the valley. Let's see the mountain top. Yes, we are having a higher peak every year to 2 years or so. When it pulled back here, went back up, and then it pulled back deeper, and then again reach a higher peak here. So, and it's going down, but not quite yet. So yes, to add it to 2026 watch list, and we have two valley lines that we are okay buying it at when they pull back down to those two, to either one of those two. So yes, for SEL. The next one is ETR. Okay, so ETR, we have some lines here that we trace, and the line is uptrending, passing by the valley. So let's see the mountain if it's getting taller and taller. So this one is really tall here around the recession of 2008, but then it took multiple years. By the way, you have the dates on the x-axis from the past to the present. Those are years. The dotted line are years. And then you have the price on the y-axis from $0 up. It took, if you can count those dotted lines, it took quite a bit of years for that to seed this one. Pretty much, it seems like during the pandemic and during the economic crisis of 2008-9, it went up there, and then this year it's going up again. Other than that, it tends to naturally climb along this valley line, and crisis is like during when there is economic crisis, these stocks does better. So the beta for it will be, you also have not considered beta when trading. Have done that in the past. I think the beta will be negative. That is like negative beta, positive beta, all on each side of 0. So, and I think when the beta is negative is when the stocks will do better when there is economic crisis or something like that. And when the beta is positive, when the stock market is down, the stocks will be down. Or when the economy is down, the stock will be down. I'm not entirely sure, but it tends to interact like that. There is a definition for beta, but it was some years ago that I have not really considered beta when buying, when analyzing a stock. But the only reason I remember it is that's the second time I'm coming across a stock that caught my attention, that during the economic crisis it tends to perform better. So it's not something I would want to buy to add it to my watch list, because we traded on uptrend line, and I'm not seeing it. I can see the entry point, the value line, but I'm not seeing the exit point. It goes both ways for us. Going into 2026, we want to be able, just by, as we are picking stock to put in our watch list, not to buy it just yet, just to put in our watch list to be a part of stocks we might trade during the year. We want it to be able to determine where will we sell it and where we will buy it. And if we can clearly see those extreme sides of the chart, we prefer not to add it to our watch list, whether we are going to swing trade it or short-term invest it. So I'm seeing entry point, but I'm not seeing exit point for it, because we have to see all-time new high before we sell it. And clearly it could take, and interestingly is reaching all-time new high this year after some years, 5 years, 6 years or so. So I don't know if it's going to be about every 6 years is going to do that, then we can understand it. But still, it's not going to be a part of our 2026 watch list for that reason. So when we come back here, we put no, but we can leave it like that and just put a note here that clear valley line, but no clear new high, or no clear exit point. It does better during economical crisis. Economical crisis. So that way next time we come across it again, we can read our notes. So PPL. It does not mean the stock is bad. It just means that the strategy we are using to swing trade may not work well for it. And in that instance, we can buy it, but we won't be able to sell it on time where we want to sell it, because we are not seeing where we want to sell it. And there is no previous year repetition that we can rely on. So this one, we have this valley line that is claiming great, but now the exit point, which should be all-time new high, was so far in the past that we don't know when it's going to replicate it again. Again, it happened during the 2008 recession time, and it has not surpassed it yet. So for that reason, the answer is no. So the next one we are going to analyze is L.L.C. So L.L.C, we have those two lines that we trace, and yes, this one is upward trending. Let's take a look at the mountain. You see, the mountain is getting taller and taller every year or every 2 years or so, and then it pulled back. So from here, it took all the way here before it touched base with it and went higher and pulled back and went up and has not come down yet. So yes, for 2026 watch list, and this is going to be the entry point. And again, this year we see all-time new high there, so our default exit point. So it's going to be a good chart. Okay, so this is a mouthful. Let's not memorize it, but just copy it and go paste it. So EVRG, if EVRG, yeah. Okay, that's kind of, it didn't even start from low, it started from higher up. I'm seeing a narrow here. I don't know if I bought it in the past and sold it or what, but okay, so the line here, are we talking about the same stocks? Anyway, I copy and paste it, I didn't type it, so that will be it. This line is horizontal, and we are not seeing uptrending, so we are seeing something here. So from here, all of a sudden it went higher up. Maybe it went through a type of reclassification, I'm not entirely sure, but from here we are seeing higher high, and this year it reached all-time new high. My concern though is I'm having an horizontal valley line, and we want the valley line to be oblique. So we are having higher highs, and we have an horizontal valley line. And in some way, it will be a good one for swing trading in the sense that you will pretty much buy around the same price at the valley line each time. But I don't know if that's a good thing. So, because when I'm not seeing a growth at the valley line, I don't want the stock to be downward trending, because once it breaches that valley line, it will be downward. So for that reason, the answer is going to be a no. But if you are willing to buy at an horizontal line, the good news is it's going higher though. But here is the thing: where it's going, the tip of the mountain is predictable as well. Is more horizontal. Like if you can trace, let's make it this way. I'm going to move this down. Is just walking around that area, barely higher up to exceed the previous one. But the thing is, even here didn't exceed here. So from here, that's now that is reached all-time high, and that all-time high is pretty much around that same area. So it's working within this predetermined area. It's now, I'm not going to say it's a bad stocks. It's one that if you like it, why not buy one share of it and test it yourself. Or each time you are going to buy, it's just going to be one share. But the thing is, it's predictable. You'll buy at a specific price or so, and you know that you will sell it at a specific price, even if it's going to go over it, because you don't know when it's going to go over it. So you'll buy it around $30, around around $50, and sell it around $73, and make $20 or so profit per share. But for how long it takes, here was 2023, so it'll take about 2 years or so for you to make $20 profit per share. So it's not bad, at least it's predictable. So if you are comfortable with it, you can give it a try, and just know that that you don't know if it's going to go down or not, at what point it's going to find momentum to break out of that consolidation pattern. But until then, if you like this predictability type of stocks, I have not really come across one like this so far in the 300 stocks that I've been analyzing. But if you like it, well, you can keep that in mind. Let's see here. Last time we touched base with it here, okay, it's about 2 years or so as well. So there is that predictability that every 2 years it will leave the valley line and reach the top, and then take about the same to come back down. So it's making that cycle within 4 years, like 1, 2, 3, but then it started somewhere here. So about 3.5 years to 4 years or so type of scenario. So 2 to go up, and it might linger there a little bit, and then it will start going down as well somewhere here. We are not entirely sure. So that is one that I'm kind of curious with, to keep it around and take that note with if I want to do something with it. But it's up to you. It's completely different from the other stocks we are trading, and it's completely different from the strategy we are using. But it's so clear here that if we are going to trade this, we are not going to analyze much other than just analyze it within those two support and resistance line that we buy it here and we sell it there, period, type of thing. So to do something like that, we are going to take a note of it, and I can just put special case. No, I think I can do specific I don't know. So I'm just going to come down here and put today date and note that now up trending is a level stocks. Buy at 50, sell at 70, and cycle is about 4 years, 2 years to go up, 2 years to go down. And we'll see if we want to add it to our watch list or not. But frankly, we have a lot of stock in our watch list that this we shown we don't have to add it to our watch list. And I put growth and dip here, but frankly it's going to be level. So yes, we are having that growth and dip, but it's working within a specific time frame, which is okay. That would that even make sense? We found those that are uptrending, so, and they are in the same category here, same sector, but why is it that predictable? And for how long has it been around? Since 1980. The chart is not showing us March though. The chart is showing us 2019 here. So why we are not seeing 2000, all the things before? And all of a sudden from there, it went this higher up and just became that level. So, and again, it's not the only utility company we have out there. So therefore, the answer is just going to be no. We don't need to add it to our watch list. It's not like we are out of stocks or anything like that. So one more we are going to analyze, but again, it's not a bad stock per se. Doesn't cost anything to just buy one share. Oh well, it costs the price of one share, and just see what you can do with that stocks. But we want stocks to be uptrending to show us growth, both at the valley and both at the top. ATO. So and the reason why I like growth at the bottom, so that we do not invest in downward trending stocks. So when we are looking at, but again, the downside of this strategy is each time you are buying it, you'll be buying it at a higher price, even at the valley. But we are okay with it. And if you are not okay with it, the EVRG will be a good one, because again, you'll be paying about the same price for it, and you'll be locking in the growth away from that. I'm not even sure if it pays. I would assume it pay a good amount of dividends. Yeah, it does pay dividend 0.6, so more than 50 cents every 3 months or so. So yeah, but anyway, I think ATO, right? It's not a bad stocks. It's an interesting stock, actually, just for the fact that it remains within those two limits. Make it interesting for me to add it to the watch list and see what I can do with it. So I will give it a try and see. But anyway, ATO, the important things is when you come across those specific cases like that, take your notes. That way you don't try to swing through it with your regular strategy, since it's not respecting. You can put it in that mold. Does that make sense? It has its own strategy out there already, and we just choose where we'll buy, where we'll sell it when we trace those lines. So ATO, we have those lines we trace already. We are seeing higher lows, so therefore the value line is great. But let's see the mountain. Yes, it's getting taller and taller every 2 years or so, and this year it get even taller. So yes, for it, and it can touch base with the value line multiple times on its path, but at a higher price, so that's fine. So yes, for this one to be added to 2026 watch list. And I'm going to put okay. So, and this concludes today analysis, and pretty much, let's see, interestingly, all of them but two didn't make it to our 2026 watch list. With this one, that cannot be traded with our Uptrend swing trading strategy, but we are still going to use our strategy in the sense that we'll buy it at the valley and sell it at the peak, and those valley and peak are predetermined already for it, because it's horizontal. It's using horizontal valley line and horizontal resistance line for exits. Thank you so much for watching our videos. We thank you for your time. Thank you for all your comments. And we thank you very much for subscribing to our channel. I'm Afiavi Liberman, Curious of Liberman Consulting, L.L.C, YouTube channel, and NASDAQ.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small and grow your account from there. We organize small group online workshop where you can practice analyzing stock to see if a stock is well positioned for you to buy some share during the week. If you are interested, will you please check our online store Liberman.com and reserve a spot. For more tips on how you can create your own watch list, will you please check the playlist in the description of this video. Thank you for your time.